Hello everyone, I hope you're doing well and safe. If you hadn't subscribed yet to my channel, please click the subscribe button down there so that you can get all the new alerts when it comes on. Well, let's jump directly to the topic of today. I want to talk about the secondary market. So as from the name of it, it's called the secondary market. It means that there's a primary market. Okay, what's the primary market? We talked about in previous video about the IPO. IPO is the initial public offering that we said it, which is the primary market, is when the investor buys from the company, meaning that the company, like we said, want to raise cash, so they issue shares and investors, they buy it. That's the primary market. It comes from the company to the investor. Who does it? Investment banks usually, and they're called the underwriters. Those investment banks, don't really put a lot of focus on that now, but usually the investment banks are the ones who collects that money from the investors and gives it back to the company. Okay, so that's the primary market. Now, after the ownership is with me as an investor, and I hold that share of certificate that we talked about, I become an owner. And then when I become an owner, let's say, for example, I don't want to become an owner anymore. What do? Can I go back to the company and say, I don't want you anymore? I want to give you back my share? No, the company doesn't work that way. So the company would tell you, well, go ahead, just try to sell it anywhere. And try to sell it anywhere. This is the secondary market, where you go out and you look for someone who's interested in buying it. So the secondary market is usually the stock market that we talked about earlier, the marketplace. This is the secondary market, where you go out and you ask who wants to buy. When you ask, you are giving a price, and then people would bid. Bid meaning they are willing to buy. So they walk in and they say, okay, so how much do you want to sell it for? You go, well, I want to sell it for $10. Someone else would say, no, I don't think so. We're not going to pay, we're only going to pay $9. Well, fine, okay, I'll get rid of it for $9. So $9 is the price of the share that you have in the secondary market. So it's very important to make the distinction between the primary market and the secondary market. So the secondary market is where all the liquidity happens, all the stock markets, the buying and selling. So I hope it was informative, and like I said, don't forget to subscribe. And by the way, if you have any comments and you want to ask me any questions, please go ahead. That would also help me in my next videos to be able to address all those questions. Have a beautiful day.